Go ahead and get started. We are live. So many of you make the comments about how I resemble Chuck Norris, so I thought I'd play a little homage to the UFC there with the We Are Live thing. But we are live, and thanks for joining us through the multiple social media platforms. Let's take a look at the market. Now, this will be recorded, so if you aren't seeing it live, and by the way, if you do like these recordings, please hit that like button, or better yet, hit subscribe. You'll be notified immediately when one of these videos is posted. It's helpful, you know it is, and we really appreciate it. All right, so taking a look at the market, we finished to the downside today after a pretty robust move on Wednesday following the Fed announcement. And if you happen to miss it, the Fed did raise a quarter basis points, but 25 basis points, if you will. But a lot of people felt like Chairman Powell, he seemed to have this calm to him, and people viewed that as being a little more dovish than what he's been. And so the Fed Fund futures has priced in another 25 basis points, but interestingly enough, a 50 basis point rate cut by the end of the year. And as you know, I've been saying that I do feel like they will have a rate cut this year. I've said that in numerous of these recordings. You can go back and look at it, but not one Fed governor on the FOMC has said they feel that there'll be a rate cut this year, but the Fed Fund futures differs. So I was listening to some past Fed Fund governors on the financial networks today, and they're saying the market has it wrong. The market is rarely wrong, and the Fed Fund futures had a pretty good history of getting that right. So we'll see how it plays out towards the end. All that occurred with a big reversal on Wednesday after the Fed announcement and Chairman Powell's seemingly calm demeanor to the jobs report that came out today. 3 times the number of jobs expected in the non-farm payrolls report that came out. And so that sent the futures to the downside, thinking, okay, well, maybe the Fed Fund futures are going to have to reprice this. Maybe there'll be another 25 basis point cut or a raise, maybe another 50 basis points, and maybe we won't get the 50 basis point rate cut at the end of the year. All that was being speculated. And then the market opened. And once the market opened, it was like no harm, no foul. We opened to the downside. We rallied higher. We closed lower. But in the end, we're still a touch overbought from where we are from the 10-day moving average. So if we go back a day to where we were here, you can see that 1-day difference. But the interesting thing is if we were to step back, you can see that we have a relabeling going on the chart. We move back here. We were in a corrective phase, and now we're in a wave 3 to the upside. So interesting that the market has relabeled in the Elliott Wave pattern to a wave 3 to the upside. And now we go back and look at that zigzag pattern that we've been talking about for quite a while. And you'll see that we have passed the 61.8% level. So we've moved beyond that, got a little bit above it, and we came back and we closed pretty much on it today, but we again are still a little bit overbought. So look where that 436 level is. I've been showing you the zigzag for how many weeks now, and it's right smack in the middle of where that wave 5 tap box is, and the tap box stands for time and price projection. So you can see that we've got now 2 Elliott Wave patterns, this big zigzag that we've been in for a while, and now this new relabeling with a potential wave 5 target at the exact same price, call it 435, 436, whatever you want to say. So, you know, with the fact that we're overbought, perhaps we get a little bit more weakness at the beginning of the week. But the fact that we didn't sell off and then continue to sell off today, I mean, the initial opening was immediately bought into, and then we drifted down throughout the rest of the day. But pretty interesting with this relabeling of the SPY and where we are with the forecast. Again, a wave 5 pattern and a zigzag pattern giving us the exact same potential target. All that does is give you a higher percentage of possibility that we move to that target. One thing I'd like to ask, and I know some of you are live here, we'll do a little Q&A at the end, by the way, so invite you to stay till the end. But if you're watching this as a recording, I'd like to ask what you think. Do you think the Fed will cut rates this year? That's my question. So post a comment under the video, if you would, on whether or not you think there is a Fed rate cut coming this year. Do you believe in the Fed fund futures predictability, if you will? And we talked about this last night in our insiders meeting, which we go through each and every week for our alert subscribers. We talked about it Tuesday night in Trade Finder as well. And by the way, if you are not a Trade Finder member, we do that every Tuesday night. It's free, 9 p.m. Eastern time on Tuesday evenings. We talk the markets. We look for case study considerations, and we do a case study, or we do a Q&A at the end, and we have a lot of really great conversations. People pick some really cool stocks to look at. So if you want to go to our website at ewotrader.com, you can find a sign up for Trade Finder. I'd love to have you in next week's event. But I did want to show you where we were with interest rates. To me, this was a good thing. So interest rates bounce to the upside. Normally, there's been this inverse relationship where when interest rates went up, the market went down and vice versa. And a lot of people think that the interest rates coming down has been fodder for the markets to go to the upside. And perhaps it has. But I've been talking, and if you've been listening to any of these recordings, you know what I've been saying, that I don't want to see rates go too low because prices and yields move in inverse proportion. So if we get to the point where yields start dropping too much, well, that means money's coming out of the equities market. Nobody believes in a rally or a further rally in the equities market, and they're running to hide in the bond market. We don't want to see that if you're bullish on equities, and more people make money when the market goes to the upside. As option traders, we don't really care when it goes down. But I, want the majority of traders and investors with their IRAs and 401ks to make money, and that's better when the market goes up. But I've been talking about this trading range, is if we could hold in here in 34 and kind of stay in this range up here to the previous wave 4, just kind of trade in here, even if we move up to that level. I don't think that's a problem. We don't want to see the rates go screaming back to the upside, because that implies that the Fed has not done their job and inflation's coming back. We don't want to see that either, but we don't want to see a big drop. So just a trading range now. If the wave 5 is complete and we go into a corrective pattern, some sort of sideways pattern, or even a zigzag back to the previous wave 4, I think all that's fine. I just don't want to see us break above that wave 4, and I prefer not to see us break any lower here on the wave 5. So I kind of think we're in that Goldilocks area there. And the same thing occurred with the dollar. I was actually happy to see a little bit of a bounce back to the upside in the dollar. Now, all this came from that super high jobs report and the concern about maybe the Fed's going to price in another rate hike or two. But the dollar coming down, I'm in favor of a strong dollar, but not as strong as it was. I like that it was coming down. I just didn't like these vertical moves to the downside, as you're aware. Again, if you've been listening to these recordings. And so a little bit of a bounce back to the upside. You can see we made it into the wave 5 tap box here. So a little bit of a recovery here. We still want the dollar to be the currency of last resort, so we don't want to lose it altogether. So as long as we stay above 96, I don't want to see us run too much higher than this either. But again, back to the previous 4 would be fine. So somewhere in this area here, let's just call between 95 and 105, I think is the sweet spot for the dollar. So if interest rates can stay in their sweet spot and the dollar stays in there, that's some positive stuff as far as the market moving forward. Now, if you're bearish on the market, here's what you're holding your hat on, this low VIX. And even with the move to the downside today, not much happened in the VIX. So we're at a low area. We're down here around 18, which has been kind of the bottom for the last year or so. And I've talked about how we had this extended period of time where we had a high VIX trading in the 35 range. Is it that unreasonable to think that we could spend a period of time in the lower end of the range? Now, when you start to break 18, that's awfully low. So could the VIX turn and run back to the upside? It could, and that's not bullish for the market, as you know. But here's a trading range again. If we could keep the VIX trading between, call it 18 and 25, we have up days and down days. The market goes through impulses and corrections, but staying in that range. So perhaps an extended period in the lower end of the VIX, not always down here around 18 or so, but in the lower end of the range, I don't think that's just that unreasonable. Taking a look at the Dow. The Dow, we have this 5-wave pattern, but I'm going to turn that off because to me, what's most interesting about the Dow is this symmetrical triangle. And it's well formed. It's a nicely formed symmetrical triangle. We have the lower highs and the higher lows. That's going to break out. And when you have a triangle, sometimes we try to figure out where it's going to go based on the Elliott Wave pattern. That's a fool's game, in my opinion. Even if you read the works of Elliott himself, he would say, hey, triangles trump everything. So when you see a triangle, it can break either direction. So just because we have a wave 5 to the upside, don't necessarily assume that the Dow is going to break to the upside. Maybe it does, but it could equally break to the downside. And maybe that's where money comes from to move into the S&P, the Qs, the IWM, the small caps. We're going to look at those charts here as well. So any of that stuff could happen. And speaking of the Qs, gosh, boy, did we jump to the upside on the Meta earnings. Let's just go ahead and take a look at that, and we'll come back to the Qs. There was Meta. Boy, the powers that be got this so wrong going into earnings. They're thinking, oh, this could be really ugly. And, Meta's had this nice run off the lows, and that's probably it. Some were even talking about this area of resistance right here at 160. Everybody was wrong. And just this massive gap to the upside, and it held it pretty well today. So all the high tech, high beta tech stocks gapped up yesterday following the Meta earnings the evening before. And so you can see with the Qs, we were way overbought going into today. Also in a wave 3 to the upside now on the Qs, and we're coming back down. We haven't quite filled this gap, and we're still overbought here. So I wouldn't be surprised if we see some weakness to start the week, but a lot of stuff looks bullish as far as these charts, just the fact that we're a little bit overbought. Now, here's another negative if you're looking for reasons for the market to go down from here. So listening to the financial networks, and yesterday, following that big Fed move that occurred on Wednesday afternoon, Fed-induced move, I should say, there was some people in the financial network saying, investment managers saying that they're getting the FOMO now. All of a sudden, they're getting lots of calls from their retail people or retail clients that are saying, hey, I haven't been in, how do I get in? So that fear of missing out is starting to show itself. And when you start to see that, that's when the last money on the retail side starts to come in. That's when the move is about over. So first glimpse of the retail starting to panic, saying, hey, I'm missing this move. Nobody's believed in the move to the upside. I'm getting all the comments on YouTube as well. Someone said that there is no reason for the market to move to the upside. None. That in itself is a reason. If nobody believes in the rally, then it's going to happen. The market always goes in the opposite direction of what the majority of people think it's going to do. But if we're starting to get the retail traders, that last bastion that's been sitting out, if they come piling in, then you have to start to be cautious. That means that the move may be over. So could we still hit this wave 5 target, hit this C wave extension? Yeah, we could. But boy, to go much higher than this, I don't really see that in the cards based on all that that's been going on, all the things that I just shared with you. And then looking at the IWM, we're above 190. We're overbought there on the IWM too, but we did convincingly break 190. So that 170 to 190 trading range is done. We're now back in the 190 to 210 range that we were over about a year ago. And look where that wave 5 is on the IWM, right at 210. So you're seeing multiple Elliott wave patterns giving you the same kind of high targets. But again, short term, we're overbought. So a little bit of a move back to the downside, I think, is warranted. But I also believe that we're probably in a new trading range on the IWM now, which loves to go in the trading ranges between 190 and 210. All right, let's talk about some stocks of interest. And Bitcoin has been really impressive, in my opinion, in holding this move up to the 24,000 area. Yeah, it hasn't been able to break through it. And you might say that, oh man, it's banging its head against resistance, but it hasn't made a significant move back. We had a fairly vertical move up from, call it 17,000 up to 24. We blew right through the 20,000 area, consolidated for a couple days, and then ran right up to 24,000 without a significant give back and staying above the 10-day moving average. I think that's positive for Bitcoin. Now, as long as the market itself stays in a risk-on type environment, I think that's conducive to Bitcoin and other cryptos moving to the upside with that halving coming in Bitcoin in the first quarter of next year. That's all positive as well. Now, if the market falls apart with some of these overbought scenarios, then that could be a different scenario for Bitcoin. Now it's got to prove that it can break 24. And if it does, you know, the next level, you remember these on the way down. So the next level of resistance on the way up is 28,000. But this consolidation here, staying above the 10-day moving average under 24, is conducive of Bitcoin trying to break above 24 and run up and test 28. Now, you all like Tesla, right? Everybody wants to look at Tesla. We're still in a 5-wave pattern to the downside here, but this move to the upside is pretty darn impressive. The chart is relabeled. Now, that's interesting, because if we go back and look, you can see there was the wave 5 that went to the downside, and you're supposed to go back to the previous 4. Now, I had mentioned, and I sent out an alert for our subscribers to catch Tesla on the way up to 160, which we did, and then it went back to 180 would be the next level, and then the eventual move back to the previous wave 4. When you have a wave 5 that extends less than 100%, your target's back to the previous 4. And I just didn't think it was going to happen so fast, and it did. And so now that we've hit that previous 4, the Elliott Wave pattern is relabeled, and that's what Elliott Wave does. Once a pattern has satisfied itself, when it's done what it's supposed to do, then the algorithm tries to figure out, okay, what's the next likely move? Well, relabeling into a wave 5 to the downside pattern is something to be cautious of. So we've moved all the way back to the previous 4. It's been a really nice move off the lows, but now Elliott Wave is saying, hey, let's be cautious of any further move here above this 200 level. Now, could this pattern become relabeled and disqualified? It could. That could happen. But just the fact that this was the next relabeling, I just think we need to be a little bit cautious here. So we've got the Qs, the S&P, the IWM, everything is still a little bit overbought, even with the move back to the downside today. So I still think a little bit of caution, but some cautious optimism, if you will. And then Amazon. So the big guys, Amazon, Apple, Google, they all missed earnings. Everybody did. And so Amazon moved back to the downside here, even after they all gapped up following Meta. Everybody gaps up. There was all this enthusiasm of, hey, all the big high beta tech names are all going to go to the upside because of Meta. Didn't happen. They all moved back in, except for Apple, which we'll show you in a minute. So Amazon's back down to the 10-day moving average. We filled this gap from that gap up. Now what we need to see out of Amazon is, can it hold 100? If it does, then we're good to go. But another 5-wave to the downside pattern. Now, these could become disqualified, but when we're seeing multiple patterns here saying, hey, maybe this move to the upside is about running its course. So caution here on how much further to the upside. But again, cautious optimism, I think. And it's not negative yet, but it could be. Now, look what happened to Apple. Apple had the gap up, missed on earnings, and we turn and move higher. So big move back to the upside, but look where we are, right back to that previous 4. Probably going to get a relabeling on the Apple chart at the beginning of next week. Does that one move into a 5-wave to the downside pattern as well, or is it going to be an impulse to the upside? I think what we see out of Apple is going to give us a good idea of where the market in general could go starting next week when this does relabel. But right now, Apple on this move here, following the fact that it moved higher off this gap, is way overbought. So quite a bit overbought here on Apple. I've always talked about how Apple is the one stock that, I mean, it's got so much cash, it's really hard to short. So I'm always cautious about that, but we are overbought and we still have this gap to get filled. And we've hit this previous wave 4 on the retracement. That's what's supposed to happen. So again, we should relabel this chart at the beginning of the week. Looking at Google, so it gapped up as well, but also came back down just like Amazon did. Again, not quite filling the gap. If we look at the 10-day moving average, still a little bit overbought here. So you can see why I'm calling for a little bit more weakness at the beginning of the week. And then we look at things and see how it plays out from there. Remember Netflix? Some of you posted, hey, don't get caught. You know, this is a false move to the upside. Well, it's held that move, and we have a wave 5 up to the 90% extension, and we could easily go to 100%. You can see that we have a zigzag pattern here on Netflix that has a potential extended target all the way up to 403. So just call it rounded up to 400 potentially on Netflix. So far it's done a really good job of holding its gains after that earnings report. I said that they blew away earnings, and some of you were saying that that was not an earnings beat. I go to the margins. That's my big argument. People look at margins, and they had an increase in margins, and that's, to me, the telltale sign of whether or not a stock can go higher. When margins compress, stocks go down. When margins expand, they like that as far as potential future earnings. And they haven't even really gotten into finding all the login sharing yet. They haven't even done that. This was a real surprise to me on the move to the upside following earnings. You asked about this last week, INMD, and I promised that I would show it this week, so I have. And what we have here is two back-to-back flats. So I've already labeled them just to save time. And then we had the wave A down, and we're in B now. So what happens from here? Do we come back a little bit and have a zigzag up to this wave 5 target, or are we going to run into resistance here and then we turn and move back down and create yet another flat? 3 in a row is usually, there's triple threes, there's triple flats, there's triple zigzags. Those kind of things are part of Elliott Wave, but there's not quadruple. Rarely do you ever get 4 in a row. So if we come back to the downside here, I would say if we come back and find support in this area, that would be a good time to go bullish. If you want to look to be bullish now, I think you need to see a break of that 39 level and show that we're doing something other than just running up to resistance and perhaps a C wave to the downside. So we need to try to break that 39 level. And if so, then I think that 44 is in play, but it's got to show me first, the Missouri thing. So I wanted to show you India here, and all that stuff that's been going on with India and the news from the Hindenburg report. It's just, it's pretty negative. I think that's had an effect on the primary stock moving to the downside that was just put in one of the S&P ETFs, and we moved down here. So can we hold this 40 level? That's where we need to hold on the INDA. If we can't hold here, then we're coming down, likely to test the lows, and nobody wants to see that. But a lot of negative news coming from that report, and then this move below the 10-day moving average. We are oversold, but we didn't really bounce. We came down to 40, and we've just held this. Yesterday we had a doji. That would have been a good time for a bounce today. Didn't happen. So just hanging around this 40 level. Now perhaps we can go sideways here, build a little bit of support, and then turn and move back to the upside here on the INDA. But for now, we'll see how that plays out. But if you're bullish, I think you got to be cautious here. You need to see some sort of a bounce off this 40 level because there is the risk that it breaks 40 and comes down here to just below 39. But perhaps we're getting towards the end of that. Selling is kind of the same thing as with cryptos and everything. With the FTX news, it was in the news every single day. You just get beat up by these headlines, and eventually the market tires of it, and usually things get overdone. And perhaps that's what's happened on the INDA here. One last thing I want to show you, and then we'll take a few questions before we wrap up tonight. Don't want to take up too much of your Friday night, but wanted to look at the EEM. So emerging markets have come back a little bit. Been watching this, looking for an entry, and wanted to see a break above 43, because if we break above that level, then I think they're off to the races. But we kind of bumped our head against that resistance, and we backed off a little bit. Breaking the 10-day moving average is not good. So is this wave 5 done? Is the emerging market move over? Just when we're looking to say, hey, if we could break above 43, we might really have something going here. But now we've backed off, breaking below the 10-day moving average. That could be the end of the wave 5. See, the wave 4 only went to the 38.2% fib level. You're only supposed to get a 61.8% extension. It went further than that. That could be the end of the move. And then, as you know from Elliott Wave rules, the move back down to the previous 4 would be expected then, which means perhaps the EEM comes back down to 38. That seems more likely now than a break higher above 43. So a lot of you have been asking about the EEM, so I thought I would throw that in there. All right, Zach, are you there? If you are, if there's a couple questions, I'll go ahead and take those real quick and turn everybody off to their Friday nights.
I am. Hi, Rob. Sounds great. Thanks for a in-depth live U.S. Market update this Friday.
Thanks for popping in on your Friday night as well.
Oh, of course. Happy to be here, and we got a pretty good audience out there as well. So thank you all for joining us for this surprise live session. It's great to see you all. And so I just wanted to mention Bitcoin. It's interesting that we actually have something to talk about now. It's nice to have some movement at least. So I'm curious to see where that goes here in the next week or so.
Yep, I know you're a big Ethereum guy, so going along for the ride there. So I know you're a happy camper.
Absolutely. So our friend Pankaj joined us and wanted to talk about UNG and the massive support around it.
UNG is one that I've been telling our subscribers they're going to see an alert on this as soon as this downward move ends, and it just keeps going down. I was ready to pull the trigger today, but it opened lower and it traded lower. Now look at that little doji there. Is that the end of the move? This is way overdone. I can tell you this is overdone in my opinion. It's too vertical to the downside. You know I don't like vertical moves because often they get retraced, and I just didn't pull the trigger today because of the weakness in UNG, but I'm about to the point where we're going to have a pretty decent bounce, and I don't want to miss that. So even if it goes a little bit lower, so I just thought let's go through the weekend, and our subscribers will likely see a bullish alert come out on UNG. But yeah, I mean that's just overdone in my opinion to the downside, too vertical. Lower, and I think we're going to see it's now. I'm not talking about any sort of a big run back to the upside or anything along those lines. We have passed 100% on the wave 5, so that doesn't mean we're going back to the previous 4. And if you understand Elliott Wave rules, you know that when the wave 5 goes past 100%, you only look for a 61.8% corrective move, not back to the previous 4. So a bounce as high as 18 is possible. Maybe we don't go quite that high. But a move just from where we are up to the 38.2% fib level, which happens to coincide with where the 50-day moving average is, I think that is in the realm of possibility. So perhaps that goes out as an alert to our subscribers on Monday. But yeah, pretty wild. This just incessant daily move to the downside because of inventory builds, etc. But it's overdone, in my opinion. Just looking, maybe getting a little bit too picky. Probably could have sent out an alert today, but let's see what happens on Monday.
Thanks, Rob. You got
Thanks
time
for joining us live, Pankaj.
Yeah, absolutely. Always good to see you, Pankaj. And like I said, we've got a pretty solid audience out there. So thank you all for taking the time to join us on your Friday evening. Mark here says GLD is crashing, and Marcus would like to take a peek at GDXJ.
Okay, well, we'll look at GLD first. And yeah, remember we were talking about all this consolidation and we were waiting to see which way it was going to break. Same thing on the SLV. Yeah, that's a pretty significant crash to the downside there. Is that a foreteller that because of this earnings report, and the Fed seems so intent on they want to see the labor market cool off a little bit, and that's not what we got today. But we didn't have this massive downward day in the markets either. So, why the metals took it so hard when the equities market didn't really? I mean, we had a little bounce in rates, we had a little bounce in the dollar, but a big move down in GLD and SLV. Pretty surprising to me, and so that's why you hold off. That's why we've been talking about this for how many weeks. When you're consolidating like this, you have to see the sign of the breakout, and we didn't get it, so we weren't long. But the break is to the downside, and breaking this 50-day moving average, pretty amazing. What was that symbol they wanted to see? GDX what? J?
J, yeah. So the junior gold miners.
So the junior miners. Okay. So here's the chart there, and that's to the downside. Now, this is a pretty interesting chart. Could this be like a market leader where we had all that sideways consolidation? This has started to move lower early before today. Of course, it moved down today, but we had already started down here, went back and tested it. So we broke below 40, went back and tested it, and then gapped down. I think this is a extremely high likelihood. We're going back to the previous 4 there. So I think 34 is the likely target for the GDXJ. Thanks for bringing that chart up, because again, perhaps that's showing some market leadership there. The miners versus the metals doesn't usually work that way. They're usually the follower, but it doesn't appear that way based on this chart. Good looking chart. Thanks for the suggestion.
All righty. Thanks, Rob. There's more symbols out here, so if you're happy to take them, I'll pass them through.
Yeah, let's do a couple more and then we'll send everybody off to their Friday nights.
You got it. So Cheeseburglar here says XJO.
Cheeseburglar, what a great name. Oh, by the way, I was going to bring up some of this, some of our subscribers had asked, because we did the forecast back in 2020 and we did the black swan. What black swans could, because remember, going into January 2020, the market had been screaming to the upside. What could derail things? And one of my black swans was, hey, there's this little virus thing over in China. Let's watch that and see how that grows early before, COVID became a big thing. And so some of our subscribers said, hey, what would you see as black swans? And one of them was China and Taiwan. And now the past week, China's been sending warships and planes to the border of Taiwan. Are they just flexing their muscles? Are they practicing for a potential invasion? I don't know. Then North Korea is mad at us because of our war games that we're playing near their coast. And then today we get a spy balloon from China is going to come over the U.S. and Trump and the Republicans are saying, shoot it out of the sky. It's just the geopolitical stuff, I think, is a little bit worrisome. So maybe they're a little bit more than just a plain black swan. There's kind of too much rhetoric and something to be concerned about. Anyway, I just wanted to throw that out there. But did you have another symbol?
No, yeah, that was definitely an interesting bit there. So yeah, the symbol is the XJO from the cheeseburger.
Oh, XJO, okay. Is just trying to save time and didn't cover every one of the international markets with the Aldina stuff, or however you pronounce that in India. I wanted to show the INDA, but the XJO, that's impressive. No sort of a move lower, moving to the upside. Now maybe it catches up on Monday and backs off a little bit, but that's pretty impressive there. 61.8% wave 4 correction. Looks like it wants to go to 100% extension. It's not that overbought. So this movement to the upside here, pretty impressive on the XJO, I think. So I think if you're looking for a place to be bullish, perhaps that's it. It's not the EEM, as you saw. The INDA has really got some issues with all that bad publicity. But the Aussie market looks pretty good. Maybe since we're talking international markets, we'll throw in Canada here and see they survived pretty well too, considering what went on in the U.S. Just trading right around that 10-day moving average. But yeah, that XJO chart looks pretty strong for the Aussies, at least for the near term, just very short term. So we need to look at it again next week.
All righty. Thanks, Rob. I'm sorry, I was just replying to one of our subscribers out there is interested in the software. So I was providing the link for that.
So you're doing your regular job on our live broadcast, huh?
Yeah,
you are.
Always working. Mr. Taylor here would like to look at Box.
Friday night at 9:30.
Oh yeah, sometimes this doesn't work though. I wouldn't consider it.
So what was the symbol?
Box, BOX.
BOX. I haven't looked at that one in a while. I can see why that one was brought up, but we're just destroying this tap box, right? The Wave 5. You wondering about the forecasting ability of Elliott Wave? For those of you that haven't viewed it before, you can find out more about it at our website, ewotrader.com. We've got all of the trading history, et cetera, there. But this is overbought now, but it is absolutely blown up the Wave 5 tap box. 94% extension on a 50% wave 4 correction. So it's kind of where it's supposed to be. Could it go to the next level? It could extend to 161.8. but it's not going to do it being this overbought, and you wouldn't want it to. Any sort of a significant break higher from here, like if it were to try to break above 35 on Monday, likely doesn't hold. So when you break a resistance area, which I would call that the top of the tap box there at 35, the next area of resistance, when you try to do that and you're already overbought, those tend not to hold. So we've got this gap here, and we're overbought. I just think a little bit of caution here. Let's maybe get some backing and filling, and then we can see if it sets up and gives us the potential to move higher. That's an awfully good looking DMI, supportive of a move higher. But again, you just don't want it to be at the beginning of the week. Let's go through a little consolidation here. Maybe even fill that gap, let the 10-day moving average catch up, and then maybe we gather enough energy that we can take a run at breaking 35 that can hold. The DMI is suggestive of that. It's saying there is legitimate strength to this move. I just think you want to be cautious for the next couple of days at least.
All righty. Thanks, Rob. So we'll finish up on, let's say, maybe one more symbol.
Sure, sounds good.
All right. So the username here is a few letters and numbers. So I'll just give you the symbol here is JWN.
Oh, yeah. Nordstrom. I can understand why that one was requested. Look at that chart. Boy, what a shock that was. And you talk about that's the epitome of overbought. But when you look at the DMI, it's like, okay, it's overbought now, but that's a strong move. Now, when you look at volume, this is what you don't want. And this is a good one to finish on. So good on you, Zach, for picking this one. This is what I talk about a lot to our subscribers. When you get these big moves to the upside, you don't want these massive spikes, because that's one short covering. And then on top of that, it's like, well, everybody that wanted to buy just bought. Where are the rest of the buyers? And usually there's a little bit of a buyer strike, so a little bit of a calm that occurs. Now, the DMI is suggestive that, hey, there could be more move to the upside, but not right away. When I see this kind of volume here, what normally happens, maybe we don't come back and fill that gap immediately, but we are so overbought now on this. There's no way I could chase this to the upside. Anybody that was long that, congratulations. It's a heck of a move. You know, I was going to say you got this gap filled, but you really didn't. It gapped through filling that gap. That doesn't happen very often. So that's kind of an interesting thing. See, we had this gap down here and we didn't trade through it. We gapped through it. So it doesn't really count as filling the gap. So there's another reason why a little bit of move back to the downside might be warranted, but it could hold this 25 level. It doesn't have to come back and fill that gap. It doesn't have to come back to the 10-day moving average. It could consolidate, and I would submit to you that this is the most bullish scenario. It could consolidate on top of 25. Now, you don't want it, if you're long this or you want to look for an entry, you don't want it to go higher now. You want it to consolidate, even if it pulls back a little bit, but it would really be bullish if it could hold 25 and stay there. Even a break below 25, I don't think is that negative, because there's, look at that. You've got a support resistance area there. What is that, around 23? So even if it were to back up, and even if it came down to 23, that's probably a great entry to try to go long there. But yeah, I figured that one was going to come up with the news that came out today with their earnings, etc. So pretty interesting. I want to thank everybody for joining us on the different platforms on your Friday evening. We really appreciate it. Just kind of wanted to come in and talk to Marcus for a few minutes. Hope you have a great rest of your weekend. Should be a very interesting start to next week. Take care.